Hi, I'm Giles, the Technical Director and Joint Founder of Havilah Resources. Havilah owns 100% of a large multi-commodity minerals portfolio that is discovered in the northeast of South Australia. This comprises over 1.3 million tonnes of copper, 3.2 million ounces of gold, 43,000 tonnes of cobalt and 450 million tonnes of iron ore, all in published JORC resources. As a result, Havilah has the highest leverage to copper and gold amongst its peer group stocks listed on the ASX on a market cap to JORC resource or ore reserve basis. Havilah holds more than 16,000 square kilometres of the Curnamona Craton, which is close to the regional mining centre of Broken Hill and key infrastructure such as the East-West Highway and railway line. This is a highly prospective area for large mineral deposits, and apart from Broken Hill, this is evidenced by the fact that Havilah has discovered 8 JORC mineral resources over the years, all with very good upside exploration potential. Our flagship Kalkaroo Copper Gold Cobalt project has an open pit ore reserve of over 100 million tonnes, 90% of which is proved. And this is at a copper equivalent grade of 0.89%. This makes it one of the largest undeveloped open pit copper gold deposits in Australia on a copper equivalent ore reserve basis. Havilah's other major copper cobalt project, namely Mutooroo, contains almost 200,000 tonnes of copper and 20,000 tonnes of cobalt. And with a cobalt resource grade of approximately 0.16%, it is one of the largest cobalt sulfide deposits with associated copper in Australia. Turning to iron ore, Havilah's vast Grants Basin iron ore deposit lies only a few kilometres from the main transcontinental railway line that connects directly to a new iron ore transshipment port facility that is being built at Port Playford near Port Augusta. Grants Basin has an exploration target of 3.5 to 3.8 billion tonnes of 24 to 28% iron, and only 25% of the area of the basin has been explored at this stage. In addition to our advanced projects, we also have many exciting exploration drill targets, and we feel we're just scratching the surface in terms of new discoveries in the region. South Australia is the only place we work because it is a low sovereign risk, mining friendly destination with a proactively supportive government. The world's best practice environmental, social and governance practices are enforced. We invite you to learn more about Havilah and our various projects by visiting our website and by subscribing to our regular newsletters, or by contacting me directly with any questions you may have. Please stay well and stay safe. Going into the presentation now, on slide 3, we've presented a snapshot for 2020. And during 2020 we were very much focused on West Kalkaroo, the drilling, feasibility study and the mine permitting, all of which were considerably advanced. We experienced positive investor sentiment, and that was very important in allowing Havilah to raise capital for its work programs through to the end of 2021. There was a significant rise in the gold price, and that made the West Kalkaroo open pit a potentially viable option as a gold mine. Then of course there were the higher commodity prices for copper, iron ore, and that prevailing bullish sentiment. We identified rare earth potential associated with the copper gold mineralisation in the Curnamona Craton, and we achieved some very positive research outcomes from the study of the rare earth recovery from the West Kalkaroo oxidised gold ore. The world recognised the importance of critical minerals, and Havilah is well positioned with its cobalt, rare earth, tungsten and copper mineralisation to benefit from Western government initiatives to develop new supplies of these commodities. And then of course the COVID-19 pandemic, which affected everybody, but since Kalkaroo is in South Australia, we were able to continue drilling on our own pastoral property unimpeded by the interstate travel restrictions. But we did delay the regional exploration drilling programs out of courtesy for the native title holders, and these programs will be resumed in 2021.
Now to slide number 4, 2021 objectives, using funds we recently raised. West Kalkaroo open pit is our priority objective. We're to advance the feasibility study and permitting work with the aim of commencing gold mining development activities during 2021. Continuation of resource infill drilling and also resource expansion drilling along major mineralised fault zones. And we're also going to continue our collaborative research to determine the best recovery options for rare earths from the West Kalkaroo oxidised gold ore. These rare earths are a potential valuable byproduct. At Mutooroo, we're to advance the PFS work to value add, which will include a major component of additional resource drilling and also process plant design and testing. Our iron ore assets, advancing the mining scoping study for an initial low-cost open pit mining development at Grants Basin that seeks to utilise the Port Playford transshipment facility and existing rail capacity. JORC resource delineation drilling at Grants Basin for the outcropping highest grade ore zones in support of the scoping study. And also detailed testing of cost-efficient dry ore processing methods using representative iron ore samples.
And turning to the regional exploration, Havilah has over 16,000 square kilometres of highly prospective tenements in the Curnamona Craton, and in 2021 we'll be testing some of these high conviction exploration targets, any one of which could potentially lead to new discovery. For example, the Banadgery Dome, copper gold, plus there's also potential for cobalt, rare earths, tungsten. There are numerous untested targets there, and including the current drilling that we're doing at the Crozius copper tungsten rare earth prospect. Mutooroo, copper cobalt district, has huge potential, and we plan to follow up some ore grade copper intersections that were obtained in the 1960s drilling, and also some very high surface geochemical anomalies we've got for copper and cobalt. The Jupiter MT anomaly work, that was planned for 2020 but was delayed, and we'll follow that up next year, and that could turn up potentially high risk, high reward drilling target in a major fault zone. And some of the funds, of course, will be used to meet our corporate overheads, which have been greatly reduced, but we still face significant fixed costs for the share registry and the ASX listing fees, plus quite substantial costs, probably over $500,000 to maintain our large tenement area. Just turning to slide 5, which is a summary of our advanced mineral projects. The map on the right shows where they're located, especially in relation to Broken Hill and the main east-west railway line and highway, and we'll be referring to some of these projects in more detail in subsequent slides.
Slide number 6 now is the West Kalkaroo open pit. The initial development plan is to commence a lower capital open pit with approximately 80 to 90,000 ounces of gold production over 3 years. This would mine the shallowest and lowest cost gold ore via an open pit mine and a cyanide leaching gold recovery processing plant. It's a lower capital and lower risk startup alternative that takes advantage of the current rise in the gold price. And as you can see from the image on the right, this is only a small part of the deposit and could be followed by the much larger long-term copper gold development as shown by the grey open pit outline. This is subject to finalisation of the updated PFS and raising of the required capital. Okay, now into Vulcan 3D software and looking at West Kalkaroo. What we've been able to do this year is finalise the site layout, as you can see here, and also look at the pit stages for the schedule. So we've got a 3-stage pit. Here's our waste dumps north and south. We've also got our site layout, like our TSF, process ponds, our ROM area, process plant, which I'll come back to in a minute, our mine camp, and our proposed airstrip. So one of the things we were able to do towards the second half of the year was work with a company out of Melbourne called Mincor via a number of Zoom meetings to really delineate the process plant design. And this is what they've come up with. It's a gravity front end with a CIL back end. It's been designed to initially treat 750,000 tonne of ore, but easily scalable to 1.5 million tonnes or there between. So that's a real breakthrough for us because it enables us to get capital costs and operating costs for various size plants and also various throughputs. And we're going to be using them in our financial models to determine what the project financial outcome looks like. Just moving over towards the pit area, what I'll do first is I'm just going to bring up the current drilling. So the drilling that we've done this year, which was done, as we said before, during the COVID time. We were able to do that effectively because we were in that remote area and not bothered by those travel restrictions. So almost 100 holes in terms of infill drilling, and basically we're infilling to about 25 by 25 to give us a really good handle on what this ore body looks like around the proposed open pit. So that's the drilling that we've done this year. So the previous drilling includes quite a lot of drilling done in the past by us and also various other companies. And you'll see here that that the pit itself certainly looks like it's had a lot of drilling done to it. And we've really been able to generate a very accurate model of what we're proposing to mine here. So, and further to that is we're starting to do some of this infilling up to the northeast of this pit, because we think there's great potential for further expansions of the pit. And if I show you the grade shells, you'll be able to see why we think there's great potential there. So this is a grade shell of the saprolite. So this is the amount of saprolite we're mining in the pit, and then also as it extends all the way around the Kalkaroo West Dome. The native copper as well. So the copper sits under the saprolite. So we're also getting into the native copper, which has got a high proportion of gold in it. And then also we then basically look at exposing the copper ore body that sits under it. So what I mean by that is if I show you the copper ore body, just by rotating around, you'll see that this is the copper measured, indicated and inferred resource that sits under Kalkaroo, and we're basically just taking the top off it. So in essence, we're pre-stripping the copper. So if I put a section through here, you'll see what I mean. So we're just taking this amount, which is the native copper and the saprolite. We're not actually taking all the native copper as yet. And then also, this is our current startup pit at Kalkaroo West. And in the same section, I'm just going to add the PFS, so the 100 million tonne ore reserve pit, which came out of the PFS. So you see that it's significantly larger, and all the waste that's been excavated already from the Kalkaroo West starter pit doesn't need to be re-excavated, obviously. So the stripping ratio for this ore body that sits under it is going to be significantly less than the 3.5 to 1 that was in the PFS. So that's just to just give you the final show of what it looks like in conjunction with the PFS pit.
Thank you, Richard. That was most informative. Kalkaroo is a valuable mineral asset to Havilah, partly because it's one of the largest undeveloped open pit copper deposits in Australia, containing a JORC ore reserve, of which 90% is in the proved category, of over 100 million tonnes at a copper equivalent grade of 0.89%, or 890,890 copper equivalent tonnes. There are very few such large undeveloped open pit copper deposits in Australia with similar JORC ore reserves. Kalkaroo is also a large gold deposit in its own right, containing over 3.1 million ounces of gold in JORC mineral resources. And this provides a natural hedge to the copper in times of economic uncertainty, as we've just been through. Kalkaroo is largely undrilled below 200 metres depth, and there are good prospects to increase the copper-gold resources as the mineralisation is open along strike and at depth. At the current long-term copper and gold prices, there's high potential to convert the large inferred resource component, comprising about 110 million tonnes, to additional JORC ore reserves with deeper drilling. The associated cobalt, rare earths and molybdenum are possible byproducts that could provide additional sources of revenue. The other interesting feature about Kalkaroo is that it is a potential future source of rare earths. One thing we discovered this year is that there are significant rare earths associated with the Kalkaroo copper gold ore. Now, rare earths are a critical mineral that are vital components in a wide range of modern applications, particularly green energy, such as wind turbines, electric vehicles, rechargeable batteries. And the supply of these rare earths is dominated by China. So in a research collaboration with the University of South Australia, we've identified that the particular rare earth mineral in the West Kalkaroo ore is called bastnasite, which is a carbonate fluoride rare earth mineral. And the main research objective going forward is to determine if we can produce an economically recoverable mineral concentrate of that bastnasite as a byproduct of our copper and gold recovery process. If we can, this will provide an important additional revenue stream for the West Kalkaroo project. It would also help the Western world's drive to become self-sufficient in rare earths. The scanning electron microscope picture on the right actually shows the bastnasite mineral intergrown with clays. It's the white mineral, and it has high contents of the valuable rare earth minerals such as neodymium. And so far it's shown good promise for economic recovery.
Now on to slide number 9 and the Mutooroo copper mine project. The concept is for an initial shallow open pit exploiting greater than 1.3% copper and 0.14 cobalt measured and indicated resources, followed by underground mining of higher grade inferred resources. You see there on the right hand side, you can see the conceptual open pit and also a conceptual underground mine design. Of particular interest in this image is areas of future further open pit potential, and next year we'll be looking to drill north of the pit and also in areas around the pit as potential ore feed. The image on the left hand side there defines the dip of the ore body and the fact that it goes to depth, so potentially amenable for underground exploitation.
And talking about additional potential, Mutooroo lies within a very prospective copper cobalt district which has high discovery potential for additional resources at nearby prospects. Havilah owns the surrounding exploration licenses 100%, and on those licenses there are numerous prospects dating from the 1960s, some of which have potentially ore-grade copper drilling intersections, but which have never been subsequently followed up with additional drilling, nor ever assayed for copper or gold. And I'm speaking particularly about West Mutooroo, King Dam and Trinity, which are identified on the aeromagnetic image on the right. And we've done quite widespread surface geochemical sampling, including lag sampling, and this has picked up exceptionally high cobalt grades at economic levels with numerous prospects scattered around the EL area. And these are invariably associated with highly anomalous copper and in some cases gold as well. And the gold potential of this area is scarcely been explored, and a hint may be gathered from Minotaur's previous exploration, where they drilled 2 holes at Mingary mine and got quite wide intersections of copper and gold.
Now on to slide number 11. Grants iron ore, favourable logistics, yield and recovery. You see there from the photo on the right hand side when we talk about favourable logistics. The railway is only 8 kilometres away. Also, the Grants iron ore outcrops at the surface. There is a 304 million tonne inferred resource at Grants and a 3.5 to 3.8 billion tonne exploration target at the adjoining Grants Basin. Both deposits outcrop at the surface, have simple geometries, minimal internal waste and low stripping ratios. The ore is comparatively soft. As I stated, they lie 8 kilometres south of the main railway line, and they are a 1-hour drive from the regional mining centre of Broken Hill with its skilled workforce. Test work shows that the similar Maldorki iron ore can be upgraded to a high quality 65% iron product for a 40% product yield with an 85% iron recovery. Power is only 30 kilometres away, and there's excess renewable power available at Broken Hill. I'll now walk you through Grants and Grants Basin in Vulcan 3D software. Firstly, I'm just going to put up the image, so the magnetic image that we would have seen before. So you see here we've got the basin on the right hand side, and Grants itself is this small section on the left hand side. That's our 300 million tonne resource, and over here is where we've done some drilling, and we're planning to do some further drilling next year. So just moving on from that, I'm just going to load up the outcrop and also the drilling that's already been completed. So the drilling that we did back in 2012 to define the Grants resource has got the blue crosses, and then the drilling we did in 2018 to discover the Grants Basin has got the green crosses. So you see that at this stage we've got a resource defined at Grants, but we need some further drilling to define a resource at Grants Basin. Now, in order to give us an indication of where we should be drilling, we looked at it in terms of how it would be mined, and particularly we wanted to make sure that we were drilling in areas where there was minimal overburden. So that allows us to uncover ore from day one and not have to deal with a significant amount of waste. So what we've done is just put together some conceptual plant layouts and pit layouts that basically give us a bit of an understanding of where we should positioning these drill holes for the next level of drilling that we're going to do. So you see here we've sort of started from out at the highway here. So we've got the highway and the railway. The railway's in purple, the highway's in red. We've got a proposed rail loop that we've got there, and then that's our road coming in, crossing between Grants and Grants Basin. And so we think that the process plant should go basically between them, so they can be fed ore from both the Grants and the Grants Basin at the same time, if that economic stacks up the best. Or else we've got it fairly close to our initial starter pit here at Grants Basin. Now that pit there is just a small sort of pit. It's delineated about a certain amount of tonnes, 20 million tonnes of ore. It goes down about 60 metres, and also what we're going to be drilling some holes along here to infill in order for us to understand the geometry around this section as well, whereas the pit may actually start a little bit further to the west, and also in doing that, because it's a basin, we may be able to mine to the base of the ore and then actually use the void to fill in with the waste material out of the process plant, and that's going to save a lot of money on the infrastructure and site works. So just to show you what the Grants Basin looks like, I'll just put up a couple of images that just show us what we're looking at. That's the base of the basin as we have drilled it out. So the basin actually extends further to the east, but there's no drill holes here at all. So that's the basin here, and you can see here we've got that's the last set of drill holes up on this western side, so hence we need to do a lot of infill drilling there, but it doesn't have to be deep. Shallow drill holes will enable us to get a really good handle on the geometry here and define some significant tonnes for fairly quick drilling.
Thanks, Richard. That was very informative. One positive development for us, we believe, is Port Augusta Operations' plan to construct the new Port Playford iron ore transshipment facility. This is being built on the site of the old Port Augusta power station, and it has a direct rail link from within a few kilometres of our Grants and Grants Basin iron ore deposits. So wrapping up what we've said today, why we think 2021 has a very promising outlook for Havilah. First of all, the right commodities. We have significant potential occurrences of critical minerals, plus copper resources, iron ore resources and gold resources. It's the right time, very favourable commodity prices, and also excellent medium-term outlook for copper with the renewable energy revolution well upon us. And we believe we're in the right location because in South Australia it ticks all the boxes and there's nowhere better to operate. As a result of the capital raising, we're fully funded to carry out our 2021 work programs, and we note that in recent times there's been quite keen investor interest in Havilah's projects. So one of the things we'll be doing during 2021 is evaluating the best options for realising value in Havilah's various mineral assets, particularly those that are currently assigned little or no value by the market. And I'm thinking particularly about the uranium assets, for example, and even the Mutooroo copper cobalt project. And there are various possibilities which might include an IPO spin-off, sell down of an equity interest, or a joint venture. The near-term gold mine development proposed at West Kalkaroo, which of course is subject to completion of feasibility study, permitting and financing, is very exciting. And if all goes well, mining development work could commence prior to the end of 2021. And a point which I've made in a number of presentations, but which is still true, is that Havilah has the highest leverage to copper and gold amongst its ASX listed peers, whether you look at its JORC resources or its JORC ore reserves. And there are some charts included in the additional information at the back which summarises this, and I suggest you have a look. Just a final thought to leave you with on slide 14 is Havilah's high leverage to copper and why we think this is a major positive factor for us going forward. We have a very positive view on copper because it's going to be a critical mineral of the future. It's necessary in just about everything to do with renewable energy and all the critical components that go with that. It has many other uses like antimicrobial surface coatings. And the copper price over the last few months has been gaining considerable momentum. The chart on the right shows a 60% increase in the US dollar copper price since April, which is quite amazing. And the other factor is that we see ethical copper is coming. An increasingly socially conscious Western society is definitely driving moves towards a copper mark that will take into account environmental, social and corporate governance, the so-called ESG credentials, in producing and quite probably in the pricing of copper. Now, Havilah is exceptionally well positioned to meet this challenge, given that it is operating exclusively in South Australia. So given the fact that Havilah owns 100% of 1.3 million tonnes of JORC copper resources, plus exceptional upside discovery potential for copper, gives us great cause for optimism. The remaining slides in this presentation is background information, and we certainly encourage you to have a look at that. It supports some of the assertions we've made earlier in the presentation about the size of the deposits and where Havilah's deposits and Havilah ranks, and something you can look at in your leisure.